Welcome to Degen's realm, ladies and gentlemen. Are you fully prepared for tonight's data release? Tonight is destined to be another sleepless night for us Degens. Now I know some of you will probably be like, okay, stop it. What data? It's the CPI, and more than that, we have June FOMC coming as well. This year is another macro year. Market is super sensitive to any data that hints to the Fed's decision next. For those who haven't been following the market closely, last Friday, we had labor data release. We see non-farm payroll increase by 272K, way higher than consensus. And even though unemployment rate ticked back up to 3.9%, we can see markets still pull back in fear of the Fed's next move, and BTC dropped below 69.4K, which was the level of the 4-hour triangle breakout, where a lot of us Degens probably entered. And on Tuesday, to prepare for the big day today, short-end treasury picked up, and market dropped back to 66 to 67K. It's basically the neckline of the head and shoulder pattern on the daily time frame. Now it is currently consolidating around that zone, waiting for tonight's data release to pick a direction. One thing I'm very proud of is that our bot captured this move and make a nice 2,000 points profit. Quote and comment if you also captured the short. Now, looking ahead. As for May CPI, as energy and food prices came down in May, we predict that the data in general will be better than expected. We predict that CPI year over year would increase by 3.3% and month over month by 0.2%. Front data same as April and better than consensus 3.4%. Second data higher than consensus 0.1% but better than April's 0.4%. As for price movement, if data comes out same as we predicted, we might see BTC very shortly increase within 1 minute K, but it might soon pull back as we still have FOMC coming. However, if the data comes in hot, we might see BTC breaks current support and hit straight to 64K. Now let's talk about the FOMC. There might be high chances that Chair Powell in tonight's FOMC will continue his fast-speaking style, hedging all the words and remaining open to changes later. He might continue to state that Fed is determined to bring down inflation back to target, but also emphasize Fed is aware of the risk on the economy. For example, unemployment rate is picking up. Generally, given current Fed dot plot graph and markets implied yield curve, it shows the interest rate cuts expected is to decrease 12.5 bips in tonight's FOMC. However, we forecast total 2 interest rate cuts in this year, and the first one might be in September instead of June due to stronger inflation data in Q1, and Fed is always not urgent. Also, we see not to expect too much excitement from the current yield curve forecast, but seeing an asymmetric risk toward lower yields emanating from the FOMC press conference tonight. Brace yourself for tonight's CPI and FOMC. Stay Degen.